Okay, you reach into your wallet, you pull out that familiar piece of plastic. It's got the chip, the stripe, those 16 digits. But hang on, is that a credit card or a debit card? I mean, they look almost identical, right? But underneath the surface, they are two completely different ways of managing your money. So let's get into the real story.
So, what is the real difference between them? It's a super common question, and honestly, one of the most important things to get right for your finances. In the next few minutes, we are going to get you a crystal clear answer.
And here's our roadmap. We're going to start with a quick trip back in time. Then we'll properly meet our two contenders, the credit card and the debit card. After that, we'll put them head-to-head in a showdown, help you figure out which one is right for which job, and then we'll wrap it all up with the most important takeaway.
First up, let's talk about the plastic that's literally in your wallet. Because to really understand these tools, it actually helps to know where they came from, their origin story.
Now, you might be surprised to hear that credit cards actually came first. Yep, way back in 1950, the Diners Club rolled out the very first one, mainly for wealthy people who traveled a lot. Debit cards? They didn't really become a big thing until the 1970s, when ATMs started popping up everywhere. And you fast forward to today, well, it's hard to imagine life without them, right? They basically run our financial world.
All right, let's meet our first contender, the credit card. The best way to think about this one is as the borrower.
The whole secret is right there in the name, credit. A credit card is a tool that lets you borrow money from a bank to buy things. And this is the most important part to remember. When you swipe a credit card, you are not spending your own money. You're actually taking out a small, instant loan that you have to pay back.
So how does it all work? Well, think of it as a four-step cycle. First, you swipe your card to buy something. Then, the bank gives a quick thumbs up based on your credit limit. Later, you get a monthly bill for everything you borrowed. And finally, you pay the bank back. And here's the catch. If you don't pay that bill in full, that's when interest starts to pile up.
Now, let's bring in our second contender. Meet the debit card. And if the credit card is the borrower, we can call this one the spender.
See, a debit card is a completely different animal. It's tied directly to the money you already have sitting in your bank account. So when you use it, you're spending your own cash. The money is debited or taken straight from your account. There's no borrowing involved at all.
The process here is way simpler. You swipe the card, the system does a split-second check to make sure you have the money in your account, and boom, the amount is deducted right then and there. And since it was your money to begin with, there's no bill, no repayment, nothing. It's a done deal. Simple as that. All right, it is time for the main event. We've met our two players, so now let's put them in the ring, head-to-head, and really break down their key differences. This little table really sums it all up. First, the source of the money. Is it borrowed money, like a loan? That's a credit card. Is it your own money? That's a debit card. Second, interest. A big yes for credit cards if you don't pay your bill in full, but a total non-issue for debit cards. And third, and this one is a really big deal, your credit history. Using your credit card responsibly helps build your credit score, which is kind of like your financial report card for getting future loans. A debit card, it has absolutely no impact on your credit history at all.
Okay, so knowing all of that, how do you decide which financial tool to pull out of your wallet? Let's get into the pros and cons.
Let's start with the good news, because there's a lot of it. Both cards are way safer and more convenient than walking around with a wad of cash. They're accepted pretty much everywhere, online and in stores. But credit cards have a unique superpower, rewards. We're talking cash back on groceries, frequent flyer miles for your next trip, things you almost never get with a debit card.
Now, of course, we have to talk about the risks. The biggest one is unique to credit cards. It can be really easy to get into debt if you're not careful. It's a psychological thing. The money just doesn't feel as real when you're swiping plastic instead of handing over cash. Other risks, like fraud or fees, well, those can apply to both cards, so you always have to be smart and keep an eye on your accounts.
So let's bring this all home. What's the bottom line here? When you're holding that piece of plastic in your hand, what's the most important thing to remember?
And here it is. This is the key takeaway. Neither card is better. They are just different tools for different jobs. A credit card is a powerful tool for borrowing and building your financial reputation. A debit card is a fantastic tool for spending what you already have and sticking to a budget. What really matters isn't which one you use, but how you use them.
So, I'm going to leave you with this question. Now that you know the difference between borrowing and spending, and when you think about your own personal financial goals, which tool is the right one for you right now? And which one is going to help you build the financial future that you really want?